Hello friends, welcome back to my channel Quest for Knowledge. Today we are going to go through with all the theory part of accounting from model paper 1 and 2. So let's go and check it out one by one. So this is the question paper. There are certain question which has been asked, certain paper which has been asked even for 2 mark, 5 mark and even for 15 marks also one question. There is a possibility of one question from the theory part to come. So theory is very important here. So the first question is definition of cost. A cost can be defined as the amount of expenditure made in order to secure some goods or services. When you are expending something in order to produce or in order to produce goods or services, that is the cost. The second question is, what is cost center? Cost center is a department or a distinct unit, different unit or a division which indirectly contribute to the organization's profit. These departments might be not indulged in production activity, but they may or may not generate revenue. So there are various centers which are cost centers, but they indirectly play a very important role in our organization. What is material requisition is a question. Material requisition is also known as materials requisition form or a material request. It is nothing but a document which is used by the production department to request materials. They need to complete a manufacturing process. So material requisition is a document used by the production department to request materials in order to complete the manufacturing process. What is the meaning of overhead? Overhead is aggregate of indirect material cost, indirect labor cost, indirect expenses which cannot be conveniently identified with and directly allocated to a particular cost center or cost object. So these are the expenditure which are being done in an indirect manner are called as overheads. Okay, we have indirect material cost, indirect labor cost, indirect expenses, which are the great examples of overheads. Timekeeping. What is meant by timekeeping? It is refer to the recording of time of workers' arrival, departure from the factory for the purpose of attendance and preparation of wage sheets. Okay, it enables the management to fix the wage of worker who are paid on time basis and determine the normal time of work to check the late attendance to comply statutory requirement and to apportion of overhead cost. So here is the question which is called as, what is bin card? Bin card is a record maintained under the inventory system. It is being maintained by the stores to show the quantities of material has been received, issued, and how much of stock is there in the balance, how much of stock is there in the hand for each receipts and issue. Maintenance of all the issue and receipts and stock is also called as bin card. So these are elements of cost. There are material, in that we have direct and indirect one. Okay, and labor we have direct and indirect, and expenses also we have direct and indirect. So all the indirect, so production overhead comes under the material, admin overhead comes under the labor, and we have sales overhead as well, that also comes under the labor. Expenses, distribution expenses. Elements of cost. A cost of an item of property, plant, equipment. So its purchase price including import duties, refundable purchase taxes, deducting trade discount, rebate. So these are elements of cost. Cost directly attributable to changing the location and condition, and it can be even for operating the condition. Okay, operating. After this we have After this, we have a cost of dismantling and removing the items and changing the location or restoring. So that all comes under the elements of cost. After this, we have the difference between financial accounting and cost accounting. Objective of the financial accounting is to completely inform regarding the financial performance of the enterprise. Cost accounting is to know the cost and controlling the cost, and to do it is important for decision making. Nature of financial accounting is that it interprets the monetary terms, and here it always records the cost. Okay, it deals only with the cost. Financial accounting deals with the historical data, and cost accounting make use of both historical one and even the predetermined cost. What is the need of the information is that financial accounting is mostly used for all the shareholder, creditors, and all. To know the financial condition, financial accounting is very important. Cost accounting is to use by the internal management to know the various cost. Okay, and time regularity as well. After that, financial accounting shows profit and loss. Cost accounting provides cost detail about product, process, job, contracts, etc. So financial statements are prepared usually for a year, but cost accounting are prepared whenever it is necessary. A format is used for presenting financial information. There is no such kind of formats for presenting cost information. So these are the difference between financial accounting and cost accounting. What are the difference between FIFO and LIFO method? Meaning is first in and first out is called as FIFO, and last in and first out is called as LIFO. So which comes first will go out also first, that is FIFO. Which comes last but goes out first is the LIFO. Unsold inventory, which is comprised of the most recently acquired good. Unsold inventory comprises of the earliest acquired goods. Effect on gross and net profit. If cost increases, the items acquired first were cheaper. This lowers the cost of goods. And first in, first out increases profit. Income tax is high. The same thing is opposite for the LIFO. In the cost of goods sold will increase and tax will be smaller. After this, we have if cost increases, items acquired first were cheaper and unsold inventory is also higher. If cost increases, recently acquired items are more expensive and it increases the cost of goods sold, and the value of unsold inventory will be less. With first in first out, the oldest product are sold first, rendering the expiration of goods in the warehouse. And in last in first out, the oldest products are kept and the new products are being sold, to which what happens, expired products in the warehouse will be high, which will affect the gross profit. After this, last one, obsolescence. With first in first out, it's very unlikely that unsold product become obsolete, but here there is a chance in LIFO method. Next question, again, what is cost? Cost, it is the value of money. It is the value of money that has been used up to produce something or to deliver a service, and hence it is not available for use anymore, is cost, which we spend in order to secure a goods or services are called as cost. What is cost sheet? Cost sheet is a statement designed to show the output of a particular accounting period. So it is a statement which is also called as a cost sheet, and where you will be able to get all the breakup of cost. Okay, what and all the elements of cost like administrative overhead, production overhead, all kind of those sales overhead, that will all you will be appeared in the cost sheet. Indirect materials are goods that, while part of the overall manufacturing process, are not integrated into the final product. Example: disposable gloves, personal protective equipment, tape, etc. Though they may not be used for the complete finishing of goods, but indirectly they are useful for the production, are the indirect materials. The next question: why do we take over time? So there are certain reasons, might be due to rush order, special order, or urgent order, where they have to fulfill the production, and if they are not able to do it on the normal working hour, they accept rush order, special order, or urgent order in order to complete the work, so that they employ the workers for overtime. So that is the question. What is a reconciliation statement? A document that begins with a company's own record of an account balance, add, subtract, reconciling items in set of additional column, and then uses this adjustment to arrive at the record of the same account held by a third party. So where you will have your own statement, which will have certain adds, which will have certain subtraction, and you will take this adjustment, and also you will check the same with the third party. So that is the reconciliation statement. Usually we do it with the bank. This is the items or expenses which are shown only in the cost account, like rent of own premise, salary of proprietor, depreciation on asset which have negligible book value, interest on capital employed in production but not actually paid. Definition of cost accounting: the Institute of Cost and Management Accountant, London, has defined costing as the ascertainment of cost. This includes the technique and process of ascertaining cost. The Institute of Cost and Work Accountant of the UK has also defined cost accountancy as the application of costing and cost accounting principles, method, technique, art, practice of cost control and ascertainment of profitability, as well as the presentation of the information for the purpose of the managerial decision making, is called as cost accounting. What are the objective of cost accounting? First of all, you can understand the various cost. Okay, you can control cost, and it is a process of accounting specially for the cost, and by this you can record all the income and expenditure, and it gives you approximate data, okay, estimated data of your expenditures, helps to control the cost, and it allows you to make budget, to know your financial condition and affordability. You can be able to make a stable decision, okay, and you can make comparison with the actual data with the standard data or performances or the expenditures and income. Presentation of correct information and helps a lot in decision making. So these all are the objective of cost accounting. What is economic order quantity? So economic order quantity refers to the optimum order size that should be placed with the vendor to minimize blockage of funds and holding and ordering cost. It is the optimum size that to be manufactured in production unit to avoid unnecessary blockage of fund and even excess of the storage cost. So EOQ, we have a formula here. As you can see, reorder quantity is the quantity to be ordered whenever materials are to be purchased. So there are two uses of EOQ. The quantity gives maximum economy in purchasing any material and ultimately contribute towards maintaining the material. And by setting the quantity, the buyer is saved the task of recalculating how much should buy each time he orders. So this is the formula 2AB by C. Okay, by that you have to apply the formula. 2 into A is the consumption of material, and B is the receiving the consignment per order, and divided by C is the cost of storing, is equals to how much of unit you need to buy. After this also we have certain inventory control technique, which is very important question for your 15 marks. So these all are the various methods to control inventory. EOQ model, economic order quantity. ABC, always better control. HML, high medium low. VED, vital essential desirable. MRP, material requirement planning. Maximum minimum system. Two bin system. Buffer stock. JIT, which is just in time. So these are all various techniques of the inventory control. So here we have the various ABC, which is always better control. This is a kind of an inventory system where ABC is a technique which analyzes according to the value. Okay, so ABC. After that, VED, which is very important, which is not so important but important, and then desirable, vital, essential, and okay. After that we have perpetual inventory system. It is a system under which the stock records are maintained in such a way where it is possible to verify the stock at many point of time. Okay. Store ledger, it is maintained in the costing department, and it is one of the basic records for material accounting in costing. Last we have a bin card. It is the stock which keeps the detail of all the receipts, issue, and balance. And LIFO method, FIFO method. So these all are the various inventory control method.